All right, so what do brothels, exotic dancers, cat food, and high-end clothing all have in relation to one another? Well, they're all tax cases, and together they tell us what ordinary necessary business expenses actually are. So when you're talking about section 162 of the code, which is ordinary necessary business expenses, oftentimes it's one of the more complicated areas because there's so much judgment involved. Well, the easiest way to do this is to look at some fun cases and to start seeing, okay, how have the tax courts and the courts actually started looking at these and what are they defining? So we're going to talk about those 4 cases and we're going to go through and we're going to be able to start to figure out, all right, what is the IRS actually looking at when they get these different cases? Now, my hope is that these cases are going to be memorable to you. So whether you're helping taxpayers, whether you're actually doing your own taxes, or whether you're a student getting ready to sit for your class exams or your CPA exam or the enrolled agency exam, you're going to be able to remember this, retain it, and apply it when you sit for those exams or work with your taxes. So what we'll start out with first is we're going to go ahead and we're going to start looking at what section 162 ordinary necessary business expenses are. So let's go ahead and take a look at a table that's going to help us define that. So what we're looking at here is the framework for ordinary necessary. And more specifically, we're looking at section 162 of the Internal Revenue Code. So in order for us to be able to deduct a business expense, it has to be an ordinary and necessary business expense. So some things are easy to kind of see with that. Things like, rent, right? If you're going to deduct rent, because you're paying rent, so you want that rent expense, that's going to be ordinary and necessary business expense. Salaries, ordinary and necessary, right? Those are going to be the types of things that you would expect to see. But there are a lot of areas that it's not as simple as that. So when we're looking at ordinary and necessary, we have to kind of understand what it is. And as we go through the cases, we'll get a better understanding of this. But the first thing is, ordinary often means common, accepted within your actual industry. And necessary is often meaning helpful or appropriate within your industry. Okay, so you need it to be ordinary and necessary. Those are both requirements. Now, I also want to caution you that having a mere profit motive is not automatically enough to be able to say, hey, we're going to be able to deduct this cost. And we're going to see a case with that as it relates to the brothel case. And we'll take a look at that case in a little while. The other thing I want to mention is when we're looking at 162, it has to primarily be for the benefit of the business. So when you start looking at pleasure is mixed with pleasure for the taxpayer, the IRS is even more concerned on that, right? They want to make sure you're not deducting things and saying, hey, I'm getting a personal benefit out of this. So for example, let's look at cosmetic surgeries. Let's say that I'm watching one of these videos and I look and I'm like, oh my gosh, I don't have any hair, right? This is a hot take. I'm balding. So what I'm going to go do is I'm going to go get a hair transplant. Well, if I go and do a hair transplant and I say, well, I think it's going to help me get more subscribers and more watch time or whatever it is that I need to get. Well, then, am I going to be able to deduct that? No, because even though it may have a little bit of a profit motive, it has a lot of value to me as an individual. That's not going to be deductible. Same thing if you're a real estate agent and you're trying to get, say, a nose job or a facelift or something like that, that you think, hey, that might help you attract more clients, right? Well, you know what? That's not going to be sufficient, okay? Because you have a lot of personal benefit from it, even though you might have had a profit motive. So when we're looking at section 162, make sure you're looking at business and not personal. So what that requires us to do is to actually take the situation that you're going to be presented with in practice or on an exam if you're getting ready for the CPA or the enrolled agent exam. What it's going to do is it's going to require you to say, okay, what is this expense and what is the context in which they want to deduct this expense? Or a lot of times it's not going to be the client wanting to deduct it. You're going to be looking over the information and you're going to be thinking that our client can deduct it because they may not know that it might be an ordinary necessary business expense. And so that'll be your job to kind of help them identify some of these expenses and deductions that they might otherwise have missed. So what I'm going to go do is I'm going to start with our first case, and it's going to be our cat case. So we'll look at the C-rate case so we can kind of get a feel for how courts are looking at ordinary and necessary business expenses. All right, so my family has 3 cats, and you can see our 3 cats that we have. So can I go ahead and deduct the food for these 3 cats? Well, hopefully you're sitting there saying, no, that's a personal expense. And that's what we just talked about. If we're looking at an ordinary necessary business expense, it has to be for business purposes because generally we can't deduct personal expenses. And if it's going to be for business, it can't have that personal use. And what is the business expense that I'm even looking at here, right? So hopefully you're saying, no, they can't be, the cat food can't be deducted. And you know what? You're right. I'm a tax attorney. Having cats does not have to do with my specific job, or being a tax professor. It doesn't have anything to do with my specific job. All right. Well, what about if we take the same expense and we change industry? You see, there's a difference between saying cat food is not deductible, and it's true when you're looking at it from a personal level, from an individual level who has pets. But what happens if we change the context a little bit? What happens if we have a cat cafe, right? So people come in, they eat, they can go over and they can pet our cats and all that stuff. Well, now maybe we can go ahead and we can deduct that cost, right? Or what happens if we are a shelter for abandoned cats or homeless cats? Well, sure. Then all of a sudden, those can be expenses as well that we may be able to deduct as ordinary and necessary business expenses. They'd be common and helpful within our industry. So we would expect to be able to deduct those costs. What about if we have cats that are going to be kept outside, and maybe we have a junkyard, and what they have to do is they have to run around and maintain the rodents. So there are rodent control, right? We don't have pest services. We're not going to go get things sprayed. We're just going to get a bunch of cats. They're going to stay outside and they're going to catch all these different types of rodents from us, mice and everything else. So that way our junkyard isn't overrun with those types of things, or our salvage yard, right? So what are we going to do on that? Can we deduct those costs? Well, that was the facts of the Seawright case. So they had cats that they would feed to attract these stray cats to their property, so that way they would also be able to take care of the different rodents that were out there. And they tried to deduct it, and the IRS said, no, you can't deduct that expense. But you know what? The tax court came in and said, yes, that is deductible because these are not considered pets. What these are pest control, so they actually have a business function and they classify as an ordinary and necessary business expense. So when somebody comes in and they want to talk to you about like cat food or dog food, right? We could do dog food as well. We could be looking at it saying, okay, if it's your pet, no, it's not going to be good. But what if it's going to be a guard dog? What if its purpose is to protect assets, right? And that's what it's designed for. It's a breed of dog that you would expect to see there protecting assets. Well, now it may work, right? Now we can look at deducting that as an ordinary necessary business expense. Now, if I wanted to take one of these cats and say, hey, that's my guard cat, or I had a poodle and I wanted to deduct the cost of my poodle as a guard dog, it's just not going to work. They're going to say, come on, that's not really going to protect anything, right? So you've got to look at it, make sure that the facts that you're looking at for this actually are consistent with what you're trying to deduct, right? So if it is related to a business, it's ordinary and helpful, then it may be a deductible expense. But if you're looking at something that's going to be personal in nature, absolutely it's not going to be deductible, like the food for our cats or the vet bills for our personal cats. So that's the first case. That's our cat case. Now what we want to do is let's look at clothing. Let's look at high-end designer clothing and see if we're going to be able to deduct that. So let's take a look at a table. We'll talk about the facts and we'll go from there. All right, so let's talk about the Pevsner case. The Pevsner case is this woman who works at a high-end boutique store. And as a condition of her employment, she's a manager there. As a condition of her employment, she has to wear the same type of designer clothes that they sell. So she's having to purchase out of pocket all this designer clothes. And it's not being reimbursed. These are unreimbursed expenses that she's incurring, so that way she can go to work and she can do her job. So she decides, I'm going to go ahead and deduct these expenses because I only wear these at work. My lifestyle is such that it would be way out of character for me to wear this type of clothes outside of work. As a matter of fact, my husband is partially disabled from a heart attack and I'm helping take care of him. So we live a more financially conservative life. We don't have the money to go ahead and just spend on these high-end designer clothes, which, you know, is significant cost that she was putting in this. So she decides she's going to go ahead and deduct those costs. Well, it's contested. The IRS says, no, you can't deduct clothing. That's a personal expense for you. So it goes to the courts. And here's what happens when it goes to the courts, right? So the court says, all right, there's two different requirements in order for something to be ordinary and necessary for a business expense. The first one over here, we're looking at, it has to be required for work. It has to have that business purpose, right? It has to have the business purpose. And hers absolutely was. So if you look at the flow chart that I created, the first thing is, were you required to wear it? If no, then you're done. It's not going to be deductible. If you were required as a condition of employment to wear it, yeah, then we made it through the first half of the analysis. But there's a second part of the test. And the second part of the test relates to adaptability. So by adaptability, what is meant is, can this outfit be worn outside of work? Is it something that you could wear outside of work? Well, obviously you have a lot of customers that are coming in and purchasing it that wear it outside of work. So yeah, it could be worn outside of work. Now, Pevsner tried to argue that, listen, others who have those resources may wear it outside of work. I don't. That's not my lifestyle. And the court said, listen, we're not going to create an administrative burden associated with having to do a subjective test to say, would this particular taxpayer wear this outside of work? Is it something they could wear outside of work or whatever? Instead, they opted for an objective test, which means, is it adaptable? Could it be worn that way? Right? And the court said, yes, the high-end clothes could be worn that way. And she was denied this deduction. This was not a sufficient deduction. So she could not take this deduction. Now, had you had something like a police officer's uniform, or maybe, you dressed up as a clown, right? Because you're doing your independent contractor and you go to these different kids parties and you're wearing a clown outfit. Well, you don't wear a clown outfit outside of those instances. So that would probably be deductible. All right, but let me now caution you when we're looking at this with a change in the tax code that happened a few years ago, because it's going to alter it. I mean, we still know this is a test that we have to use, but what happens is we now have to look at it from, is a person self-employed? Because if they're a W-2 wage earner, this doesn't happen. Employees cannot deduct these expenses. So let me show you a quick table so we can kind of make sure we're on the same page. All right, so here's where the law has changed a little bit. Now, what we just talked about on the Pevsner case still applies in general, but it no longer applies to a W-2 employee. So in the case where we saw the manager in the high-end boutique store, if she were the manager, the answer on this one's an easy no today. So before the TCJA changes, yeah, there may have been a chance that it was going to be deductible. So we'd have had to go through and we'd have said, required for work, and is it adaptable? If you can wear it outside of work, then it's not going to be deductible. Today, as soon as you see it's a W-2 employee, it's not going to be deductible because we don't get to deduct unreimbursed business expenses before their itemized deductions, and that's just gone. All right, so what about self-employed? Yeah, it still applies for self-employed. You may be able to still get to deduct these if it is something that you need for work, and it's not going to be something that you can wear for everyday wear. If you can't wear it for everyday wear, then you have a chance of it being a deductible, ordinary, necessary business expense. If it's something that you can just go outside and wear throughout the day, yeah, then that one's not going to be deductible for you either. All right, well, let's go ahead and let's talk about the exotic dancer. Let's go talk about Chesty Love and her attempt to deduct some expenses, and we'll see what happens in that case. It's kind of a surprising result. All right, so what we're talking about now is the Hess case. This is known as the Chesty Love case. It's a famous case in tax. So what happens is Chesty Love is a exotic dancer, and what she's trying to do is she's trying to figure out, how can I increase my revenue? So she's thinking of different ways to increase her revenue, and what she decides is, hey, I'm going to go ahead and I'm going to get a breast augmentation. So I'm going to get some breast implants. And she goes ahead and she does it, and she goes up to I believe it was a 56 double F is what she initially goes up to. So she then starts to track her revenue, and the revenue continues to increase. So it's a good business move. She sees this money's coming in, right? So she's like, okay, this is working. Well, however, she has a fall and damages the implants. So what happens is she has to get her implants replaced. So instead of going back to whatever size she initially was, she decides she's going to even augment further, and she goes up to a size 56N. So each implant weighed 10 pounds. So she's adding 20 additional pounds. And what she now does is she starts to be able to increase her revenue through her performances, and she's now on all the talk show circuits. So she becomes semi-famous by going to these different talk shows. So what she decides is, hey, I'm going to go ahead and I'm going to depreciate these expenses. These are ordinary, necessary business expenses, and I want to go ahead and I want to depreciate the cost of the augmentations. So the IRS sees this, and the IRS is like, there's no way that you can go ahead and you can deduct a breast augmentation. That is absolutely a cosmetic surgery. You're not going to be able to do that. So she goes ahead and she takes it to court. So it goes to court. And the court looks at it, and the court starts to consider all the different things that are going on. They notice that she's treating it as a business because what she's doing is she's tracking her revenue, and it had a revenue purpose. The other thing that the court seizes upon is that she went to an extremely large size, right? So she went all the way up to a 56 double F, and a 56N. And because of the extreme size that she went to, they said that had to have been purely a business decision because it's causing her different types of health issues. So because she went that large, it has to be business. There could be no personal pleasure derived from actually having this. So they were able to distinguish this case, the Hess case, from other cosmetic surgery cases, to where with a primary cosmetic surgery, it's primarily a personal benefit. You're getting an actual personal benefit from it. Here they're saying the personal benefit is de minimis, if any, because of the size that she went to. Had she not gone to a size 56N, then this probably isn't a deductible expense. So this is kind of a unique case because of the extreme levels that she went to. But had this been less than that, she would not be able to get those expenses. But the court did find this is an ordinary, necessary business expense, and they allowed the deduction. So this provides some insight into what the courts are looking at. So if we start looking at it and saying, okay, so in this particular case, what they're doing is they're sitting there saying how much personal pleasure versus how much business. I mean, you can see that it has to be almost all business. It's significantly business, right? And when you start getting some kind of personal benefit from it is where you start losing those deductions, that it doesn't qualify as that ordinary and necessary business expense because now you're blending the line between the two. All right, so we got one more case to take a look at, and this is going to be the brothel case. So let's go ahead and see the brothel case. After I cover the brothel case, what I'm going to do is I'm going to summarize all these cases. I'm going to put them on a table for you so we can start to see kind of where the confines are. So when you're taking an exam, when you're working with a taxpayer, or when you're doing your own taxes, you're going to be able to come through here and say, yeah, I have this. I have a pretty good understanding of what we're looking at for ordinary and necessary business expenses. All right, well, let's go ahead and take a look at the brothel case. Hey, in this case, what I want to do is talk to you about a unique case. It's one of my tax cases in the wild scenarios. So in this case, it's an actual case. You have a taxpayer who wants to go ahead and they're nearing retirement. They want to start writing books. So they decide they're going to write a book about some people going across the country, and what they're doing is they're going to be frequenting some different brothels. So our taxpayer decides, you know what? I need to understand the life of a person who works in a brothel. So he goes ahead and he goes to Vegas and he starts going to some brothels, and he goes to a whole bunch of them, spends a lot of money, spends a lot of time there, but he's taking detailed notes. He was talking about the people that he's hiring. He's talking about what they look like, how much he paid. He's talking about their history. So he's kind of interviewing them in the process of, hey, do you have kids? What brought you into this profession? Why are you doing this? What are your future goals? So he wanted to do this in order to have character development, so that way he could develop his characters inside his book. He even adopts some of the names of the people that he met at the brothels that he was when he was frequenting those brothels. Well, anyways, he writes a book, has about 10,000 of the books published, and then he wants to go ahead and he wants to deduct all of his business expenses. So he's saying, this isn't a hobby, this is going to be a business. So he tries to go ahead and deduct all the costs associated with the brothels. The IRS says, whoa, you can't deduct a cost for a brothel visits. That's not going to be deductible. Takes it to court saying, hey, it's ordinary and necessary. Look at my detailed records. I did everything I was supposed to. I can substantiate my expenses. The court said, hey, some things are going to be too personal in nature, and did not allow them to go ahead and deduct those costs. So even though it might look like an ordinary necessary business expense, it doesn't necessarily mean you're going to be able to deduct it. Some things can't be separated. All right, so let's go ahead and let's put all this together. So what do all these cases stand for? What's the proposition? What can we learn from all these cases? All right, when reading them together, the first thing that we said is, hey, when we're looking at cosmetic surgery, it's generally not going to be a deductible expense. right? So cosmetic surgeries are personal in nature. It's not a business expense. Even though it may have a profit motive, we may be seeking to increase our revenue. It doesn't allow us to deduct the cost because it's personal in nature. Now, there are some exceptions there to where you can take a cosmetic surgery, even though it's personal in nature, but those are secondary to other types of procedures and it falls outside the scope of this actual recording. So after we figured out with cosmetic surgery having that personal benefit to it, we then went over to the C-rate case. That's the cat food case. And we started asking ourselves when we were dealing with cat food, can we deduct the cost of cat food? Well, what we said is no, not if it's a pet, because again, we're getting individual benefit out of that. But if it's not a pet, if it has some type of business function, so rodent control, right, then we'd be able to deduct something like that. If we were at a cat cafe, we were running a cat cafe, yeah, then we could probably deduct the expense in that capacity as well. So what that case stands for is a proposition that ordinary is industry specific. So when we're trying to figure out whether we can deduct the cost, we've got to see what kind of industry we're in. So when you have a taxpayer that comes in, or you're doing your own taxes, or you're taking an exam, make sure you look to say, how is this being used? Is it being used in an individual capacity? If yes, probably not going to be deductible. If it's being used in a business, all right, is it ordinary and necessary within their type of business? Would that be something that would be helpful for their business, right? So that's what we're kind of looking at, and that's what's making it deductible. So ordinary is industry specific is the primary takeaway from the C-rate case. Then we went to the Pevsner case. The Pevsner case is the one that's going to be talking about the clothing. So we talked about the high-end boutique clothing that the manager's trying to deduct because she would never wear that clothes outside of work. So she wants to deduct the expenses associated with purchasing those clothes. Well, what the court said is when we're looking at this, it has to meet two tests. It has to be required for work. Second is that it has to be something that is not adaptable. You would not wear it outside of work. So the big issue on that was whether a specific taxpayer might wear it outside of work or not, or whether it's going to be more objective. So Pevsner was trying to argue for a subjective approach by saying, listen, I personally would never wear that clothes outside. The court they rejected that. They said, no, we're going to use the objective test. We're not going to get into how a specific taxpayer, what their lifestyle is or anything like that. We're going to use an objective test. And can that clothes be worn outside? And obviously it can be because customers come in, they buy that, and they wear it out. So that is one that we were unable to take the deduction on that. So the takeaway from that is that we use the objective approach instead of a subjective approach when we're trying to determine if it's ordinary and necessary. Now remember, I also cautioned you on that under the TCJA. If you're a W-2 employee, you're not going to be able to deduct the cost. You don't even have to go to that test between whether it's required for work and then adaptability. The answer is just going to be no. So if we took the Pevsner case today, then she wouldn't have gotten the deduction because she wouldn't have even gotten past that first W-2 employee. Expenses are no longer deductible. All right. So then what we did is we talked about the Hess case, Chesty Love over there. And what we said is, hey, she has some breast augmentations, first to a 56F and then double F and then to a 56N. So the question is, all right, can she deduct those costs because she's an exotic dancer and she's basically self-employed, she's using it for business purposes. Can she go ahead and deduct them? Well, the answer on that one was surprisingly yes. Now, you might be looking at it saying, how is that different than any other cosmetic surgery? Because if you're dealing with cosmetic surgery, we already said it can't be deductible. Well, the Hess case is different because of the extreme level that she went to, that she basically removed any personal pleasure that could have been associated with it by going to a level of 56N, right? So had it been a different type of augmentation, not going all the way to the 56N, then they would have said, nope, there's other benefits to it. It's more cosmetic in nature. It's not going to be deductible. So this is unique because we can start to see that, hey, even though it might look cosmetic, all right, how much personal pleasure are they getting out of this versus how much of it is it for business purposes? So it kind of gives us the guidelines of what we're looking at, of how the courts are assessing these things. And then finally, we have the Vital case, which is our brothel case. And in that brothel case, you have somebody who's taking detailed records. They're treating this like a business. It is a business. As a matter of fact, the courts find it as a profit motive. This is ordinary and necessary business expenses. So it looks like it's going to actually be deductible. But here's the thing. Because they're brothel visits, the IRS said, listen, we cannot separate personal pleasure from the business. So some things cannot be separated. And because you have that the personal pleasure part, section 262, which says, hey, no personal expenses, that's going to trump our 162 in this one. Now, that's me this saying that. That's not what the court said, but that's my interpretation of it. That look at, if you have that personal expense portion of it, the personal pleasure portion of it, that can override the business expense portion of it. So the section 162 deduction. All right, y'all. I hope this helps you understand ordinary and necessary benefits or ordinary necessary expenses. I hope that when you do take your exams or when you're working with taxpayers or doing your own taxes, that these cases will stick in your mind and that you'll be able to answer the questions that you're confronted with. Thank you for watching this. If it was helpful, please remember to subscribe to my channel.